Okay, I think we're getting some technical glitches kind of handled here. Let me introduce Evan to you. Evan is really our tax expert around here. He has a lot of experience and really focused on minimizing tax liability for our donors and maximizing charitable giving. He is a licensed attorney and has practiced law at top firms here in Kansas City prior to joining the Signatory. So I think at this point, I'm going to close our poll and we will hand it over to Evan.
All right, thank you, Kristen. I appreciate that. Hopefully we're getting all technical things figured out from where we are. Yeah, as Kristen mentioned, so I'm an attorney here at the Signatory, and I get the pleasure of talking about taxes and all sorts of fun things like that. I know some of you probably are rolling your eyes to say, oh, who wants to talk about taxes and why is this important for you? But I think hopefully throughout today you'll see that it is going to make a big difference as far as the new tax law, and it gives you just another arrow in your quiver when you're talking with donors and how to relate to them. So one thing that I like to talk about, sorry, I'm having trouble clicking over here. Maybe this will work. 1 second, if we get that. Oh, gone.
Oh, we gotta figure out. See, guys, we're gonna figure some of these logistics out live.
Yeah, that's right. Always is fun. So, real quick, as we talk about charitable giving and especially on the taxes, real quick, as we know, just kind of with everything, when I talk to advisors and other charities, is that when you're out there actually meeting with donors and trying to raise funds or solicit funds for your ministry, I mean, this is an action of biblical generosity and biblical stewardship. You have a way to actually disciple the people that you're working with. I kind of talk with taxes are a piece of that, but it's not the ultimate end goal. The ultimate end goal is for the donor themselves to understand that God owns everything, and that your ministry is, yes, it's a wonderful ministry and the things that we want to continue the operations, but that donor has to understand too that God owns all of their assets anyway. And if there's ways that you can increase the giving that you have from the tax bucket, it's such an important aspect of what the work that we do here at the Signatory, and I know that you do for your ministry. So you've probably seen this graphic or a similar one to this. When I talk about some of the tax savings and strategies, especially under the new tax law, the real purpose is, or one of the opportunities is how we can give non-cash assets. So what we see here on the left is a representation of what a typical American has in the United States. Most of their net worth is tied up in non-cash assets and only about 10% in cash. And on the right is how most Americans give. Almost 80% is in cash and only about 20% is in non-cash assets. And so there's a real opportunity by giving non-cash assets, and that's one of the aspects we're going to talk about today, Kristen, but I think there's going to be some more as well as far as when getting into the tax law. So,
yeah, Evan, can I interrupt just for a second? As you talked about at the beginning, and I'm just reminding folks that are tuning in, our last webinar was really focused on the ministry of the ask. And so as we get into this tax discussion, I guess I would really just encourage our ministry folks to be thinking about the fact that this is part of your ministry to your donors. You are becoming more informed about the tax law and opportunities for them to really continue to give generously, but working within the framework of our tax law and how it has changed. So really embrace this. I know this is not something I typically am excited to engage with, but I really do feel like our ministries can become an expert of sorts for their donors in this way.
Yeah, and taxes are maybe not the most fun topic to talk about. I understand that. But here's actually a representation of why they're fun, at least in my opinion.
Right.
Is how if we can move tax dollars to charitable giving dollars, it's a win. It's a win for the donor. It's a win for your ministry. Say, Kristen, you know my wife, Farah.
Yes.
So this is what I thought about on driving over here. is that my wife, when she likes to go shopping, and she's a great shopper, so when she goes to a store and she buys a shirt, well, she gets up to the cash register and they say, oh, by the way, this shirt's half off. She is so excited. She already wanted to buy well, she might actually go buy another shirt, you know? That's a good thing. This is what the tax law hopefully can be for your ministry. They already love your ministry. They're already buying. But what if you could say, by the way, we can save you 50% more? That's the same concept. So that's what we're going to try to talk with. I'm not a shopper, so I'm fair. That's the shopper in our household. So okay,
you're getting my attention.
That's good. Okay. So keep that in mind. We're going to touch on some of these things, and I don't want your eyes to glaze over. So if you need a cup of coffee, go for it. So the new tax law that passed last December in 2017 is actually legally called the Tax Cut and Jobs Act of 2017. It's a real fun title for it. It changed a lot of different things, and there's actually some laws right now that are going to clarify some of the changes that occurred. But I remember last December when the law came out, there were a lot of publications that came out and said, what is this going to do for charitable giving? How is this going to affect charitable giving? And from my kind of just general reading of it, it looked like the majority said this is going to negatively impact charitable giving. And the reason why is if you look at the second bullet on this, or third bullet, is because the standard deduction doubled. Now, real quick, this is kind of taxes 101. Whenever you file your tax return, you have two types of deductions. You can take your standard deduction or an itemized deduction. And if you itemized your deductions, that means whenever you gave to charity, you got a tax receipt. So the tax receipts that you're giving your donors, they likely itemized their deduction, which meant that they took that tax receipt that you gave them and were able to offset their taxes. If they took the standard deduction, it doesn't matter if you have a tax receipt or not. You have that amount of money basically that the government says we give to everybody. And so what the new tax law did, it doubled the standard deduction. What this means is that likely less people will itemize their deductions. There's been a lot of projections. In 2017, the tax filers, and this is just rolling in, about a third of all Americans itemized their deductions, meaning about, of all the taxpayers out there, only a third of them actually, if they had a charitable tax receipt, were able to claim that on their taxes, and 2/3 of everybody just took the standard deduction. So this is the big worry, is what's going to happen when now we're expected that number to even drop in half or potentially 2/3 less. So even smaller amount of people that are going to itemize. Does that mean people will stop giving?
Right.
My personal opinion is no. And there's several reasons that we'll hit on this, but that's the biggest point I want to hit from this, is that the biggest change for charitable deductions on a negative potentially is the increased standard deduction.
One quick thing before we jump into this next slide, and I would encourage any ministry folks, if you have some questions, please start sending those our direction, because we certainly want to address them as you have them. But I do want to kind of put this disclaimer out there that we really don't know the impact for the tax law. I mean, I've read several articles speculating. I know that you've done your fair share of reading on the topic. So I do want all of the ministries that are tuning in to understand we don't know for sure. This is really based on some research and doing some due diligence and having conversations with donors and analysts. We'll know a lot more in 6 months or 8 months, but we just don't know for sure right now. What we're trying to do today is equip you with what we think is going to happen and really give you some tools to leverage against what we anticipate coming down the pipe.
Yeah, as Kristen and I go to the same church, so our pastor will say, "This is what we know. This is what's in the Bible, and here's maybe our assumptions or things like that we can piece together."
Right.
And so I'll make sure to explain that. So on this slide, actually, these are what the things we know. This is in the tax law.
Very good.
Is one, that charitable contributions are still deductible. That's a good thing.
Yeah.
So of the itemized deductions that remained, there was a lot that were cut out. So now people that itemize their deductions, they have 3 things that they can deduct: their mortgage interest on their first house, their state and local taxes, and charitable contributions. There's also medical as well, but those are the 3 main ones. The big thing is that charitable contributions remain deductible. That's huge. That is very, very big. And even then, charitable deductions were capped to 50% of a person's income, and now it actually increased to 60%. So what's important about this, and this is my assumption reading between the lines, is that Congress not only, it's almost solidified the charitable deduction even further. It's saying that not only are we going to leave it in as an itemized deduction, we're going to increase those limits, which is a big thing. If you have donors, and I know this is very rare, but you have donors that are giving over half of their income, they now receive a bigger tax deduction for that, which is pretty big. One thing that we'll jump into kind of the planning and charitable planning considerations that you can think about as far as from the itemized deductions to the standard deductions, those types of things, is really what the things that we know. So the biggest thing is, and I didn't include this on this list, but it's something that we can actually back up here, is the tax rates overall have reduced. So the highest tax rate has dropped by almost 3%, and kind of across the board, what we're expecting is that more people will have money. And so that's a good thing, is that your donors that are giving to your charity, they pay less in taxes now. So they actually have more maybe take-home pay, these things that they can actually do some additional charitable giving with. So that's important. One strategy, Kristen, that I wanted to talk about is where we come in involved at the Signatory, as well as just other strategies, is that there's a lot of talk of bunching. And sometimes I've heard a lot of unique terms for analogy for this, but in essence, is a donor will give more in one tax year in order to itemize their deductions. And then the next year, simply take the standard deduction by bunching charitable gifts that they're doing multiple years in one single year to get a better tax benefit. Again, this is one of those hypotheticals. We don't know what the effect of this is going to actually look like, but this has been the biggest thing with the standard deduction doubling, is that many charities are expecting either larger gifts within a single year, or utilizing a donor advised fund for somebody to give multiple years of giving into the donor advised fund. And with the donor advised fund, there's no limits of when that can be given out. So they can take the deduction in one year, give it out over the next year or the next several years, whenever that's involved.
Evan, one thing, I was just talking with somebody today who also works in this industry, and we were talking about what do we anticipate and what strategies are we providing. And we talked about bunching. And what I would encourage you as ministry leaders to consider is start familiarizing yourself, or if you have the data systems to support this, look for abnormal behavior, especially this year end with your givers. If you do see a gift that is twice what you've gotten in the past or significantly higher, it is certainly worth flagging and having a conversation with that donor. They may be bunching. So what I don't want you to do is think, wow, they love us more, or they've gotten a greater gift and can give us more. That might be the case, but it could be that they are bunching a gift to you in 2018, and then 2019 will look different. So I just want to make sure, my job is to equip you, and so I just want to make sure that you are prepared now to start watching those gifts as they come in this last quarter.
Yeah, and what a great touch point with your donor. If you see a gift that's double or much larger than they normally donate, yeah, when you're following up to thank them for such a generous gift, that you can have that conversation, especially with a business owner or a CPA or professional. It allows you to have that conversation to discuss, hey, for our own budgeting purposes, is this gift meant for this year and next year, for the following year as well, just for planning? many donors will actually appreciate that. It shows the business mindedness of your charity by just even asking that question, and also having another follow up and touch point with them to thank them for such a great gift.
Absolutely.
So those are helpful. A couple of other real quick points. One is the qualified charitable distribution, which I know that just even saying that term probably put some people to sleep. But this is an important one. So from an IRA, if you have donors that are older, and when I say older, specifically 70 years old and 6 months. If they are older than the IRS rule of 70 and a half, if they are older than 70 or 71 years old, then what's required when they have a retirement account or traditional IRA retirement account is that they have to take a distribution from that retirement account every year. It's called a required minimum distribution. When they take that account, they take that distribution, it's taxable to that person. Well, the IRS, and this was solidified actually back in 2015, but it was remained in the new tax law, is that the IRS allows that person to say, instead of taking the distribution personally, they can simply direct it directly to charity. And they pay 0 taxes on it, and they don't have to itemize their taxes as well. So most retirees are not itemizing their deductions. And they were required to take this required minimum distribution from their IRA. And so it's a fantastic tax benefit for that person. So if you have donors that are older or retired, just be aware that you should be able to say, we can accept qualified charitable distributions. If you are a 501c3, you're good to go. So that's a very, very important thing for all of you to be thinking about.
And this kind of falls in line. I know as a development director in my past, I think, oh, who are my donors who are 70 and a half and older? But this is kind of like that planned giving conversation. Like you need to get this message out there. It's applicable to 70 and a half and beyond. But those that are not quite to that age, it's still something good. You're planting that seed. They know that now, when I do reach that age and am required to take that distribution, that I do have this option for tax savings.
Absolutely. And for that one just alone, I mean, this is the thought that gets to me. If they were to take that distribution and pay taxes on it and then turn around and just give it to the charity, that's about half as much that they're able to give. If they directly the same distribution to you, that's double the amount to charity. It's what they wanted to do anyway. It's the buy one get one free. It's a good buy.
Good deal.
It's a good buy. One of these points that we're going to chat just a very, very quick moment. I know, Kristen, you've had other talks about this and other webinars. Is it getting appreciated assets under the new tax laws? When I say appreciated assets, that's everything that's not cash. That's publicly traded stock. That's real estate. That's closely held businesses. The new tax law not only left in the good tax provisions to giving appreciated assets, it enhanced them. And so if you have donors that are giving large cash gifts, it's worth a conversation to say, hey, did you know that you can give publicly traded stock? The stock market last week hit record highs. And so there are some great tax benefits to doing some of that. Real estate markets are growing and growing and growing. And so these are great assets for people to give to charity, and they usually are the much bigger gifts than your traditional cash gifts alone.
Right.
So that's something to always be on the lookout for, especially as we approach fourth quarter. One other thing that I think of, and this is me making an assumption, is because on itemized deductions alone, because there's really only those 3 things that you can deduct: state and local income tax, or state and local taxes, mortgage interest, and charitable giving. Because charitable giving was the only one that increased, I think we might see people that are the middle income people in the United States, where they're going to be on the border of whether or not to itemize or take the standard deduction, that they might say, how about I just give more so that I can take so that I can itemize deduction. it might actually make more sense from them from a tax standpoint, but I think there's going to be several people that are going to be on that border. And so it'll be interesting because of the other tax deductions they're losing, they might decide to actually give more so that they can have those benefits. But that's, again, something to think about.
Right. Remains to be seen. I would say I would encourage you to, development folks, start messaging that. We're going to talk about some other messages, but you need to kind of determine what your different messages are, because Evan is a little bit optimistic, I think, sometimes, and that he thinks that people are going to be thinking that way, but we live in this world. We talk about giving all the time. They're not thinking about it all the time. If you plant messages like that, you can change the way they are thinking or begin a new train of thought that may actually become a reality, but not something they would have been thinking about prior to you beginning that conversation.
One thing I would think about, and again, if you have a database and you can track these things, you probably are going to do this anyway when you're doing tax receipts, is looking at what a donor has given you for that year. If they've given you $5,000 or more, and if they maybe have given to other places, their church or other charitable giving, they're probably going to be on that border.
Right.
And it might be worth just to even have that conversation to talk about this, because just a unique thing to talk about.
You know, and I would say, I know a lot of you will be having year-end conversations with your donors. It's a great time to, especially with those higher mid-level to larger donors, you're going to start having those conversations, whether it's coffee or taking them to lunch. Make this part of your conversation. Not only can you share about your ministry and learn what they're thinking and potentially inform them and be kind of a value add to the conversation, but it's also a data gathering exercise for you. You can hear how they're thinking, and that will really help you in your planning, not only for this year end, but even in 2019 and how you might strategize your giving approaches.
Exactly. So not really going to talk about real estate gifts, but just know that it's out and available. You should be thinking about it, as well as closely held businesses, and we can probably have other conversations about that. So.
I will tell you both of those things are certainly things that are valuable, especially for your higher capacity givers. Be always looking at your donor database for those business owners, folks that might have rental properties or other real estate. So do certainly put that in your toolbox. And if you need some additional help in that area, always reach out to me. I'm happy to help provide some guidance.
Absolutely.
Okay, so this is kind of my portion of the conversation, and I will also invite Evan to participate. But I want to kind of tell you, just based on my reading, based on conversations here in the office and with Evan, what I really feel like is your best strategy going forward. So we are approaching next week. We're officially in fourth quarter. It is time to really begin thinking, how am I going to be engaging my conversations with those donors? So here's the key piece. Invest in your major donor relationships. Your major donors want to know how you're thinking. They are oftentimes business owners. They are managers, executives. They are big picture thinkers, and they want to know how you're thinking also. So make this a point of your conversation. Talk to them about how you anticipate the tax law impacting your ministry, and be frank. Say if you are nervous. And don't be afraid to ask for a larger gift. These donors care about the work that you're doing. They are invested with you at a high level because they are mission-minded with you, and they are going to be open to that kind of conversation. I'm not saying they're all going to be able to double the amount that they give, but be frank and honest with them about where you see your ministry position relative to the tax plan. Okay, second one, be mission-minded. I think this is fair in all of our communications with you guys are doing great work. But particularly with your mid and lower level donors, probably primarily those mid-level donors, be very mission-minded. If they are on the bubble about whether or not they're going to itemize or not, or give or not, they're not making that giving decision so they can get a tax write-off. They're making a giving decision based on the work that you're doing. Yeah. They're excited about the ministry that your organization is doing. So continue to convey to them what they are accomplishing by partnering with you. That will always help you in maintaining that relationship. Will it be the same it has been in the past? We don't know. But continue to be mission focused in your communications with them. And then with lower level donors or those that you haven't engaged yet, I think this is really a prime opportunity to also engage them from that mission perspective. Social media, crowdfunding. We'll talk about that as we get more towards Giving Tuesday, but I think you need to kind of be thinking about other ways to engage new people. If I am going to lose some mid-level donors or some lower-level donors, how do I continue to engage kind of that next group of folks? So always be looking for new ways to engage. Plan your year-end effort now. October is Monday. So I would just encourage you all, if you haven't put a strategy together, it is going to be very critical that you are actively communicating with your donor base as we approach year end. And familiarize yourself with this tax law because it will come up. Certainly not in every conversation, but it will in some. So be prepared. Social media strategy, like I alluded to earlier, be thinking about that new donor pool. Who can I engage? A lot of times those initial gifts, again, those $20, $50, $100 gifts, they're not happening because they're going to be part of an itemized tax strategy. Those are just gifts because they love what you do or they're excited about what you do, or in crowdfunding, my friend is excited about what you do, so I'm going to give $20 because she is excited about it. Please really evaluate that as a possible strategy to continue kind of a new revenue stream coming into your organization. And then finally, evaluate corporate opportunities. I would have those conversations if you have a gala or if you have a big banquet and you have corporate sponsorships, still engage them in giving. It's possible with some of your smaller corporations that those owners or higher level execs might do some giving through their corporation if they're not going to itemize personally. So just continue that conversation with those corporations and maybe grow some of that corporate giving a little bit as well. So that is what I would encourage you to do relative to what your ministry plan should be going forward. I know we've had maybe a question or two pop up on the screen, and so we are going to get that going, and then I'll just open it up and see if we have any additional questions from those that are out there.
As we're pulling up questions here, one thing about with the corporate giving is that you might want to just really think about the corporate tax rate has also dropped significantly. So corporations themselves have a lot more cash on hand. And so I think that there are a lot of opportunities for marketing dollars for them to also say, oh, you're having a gala, there's a lot of people, maybe this is a marketing event for them. They have sponsorships. They have more cash now. So they might be able to do some of those opportunities, which is good.
Yeah.
So.
Okay, so the question came across about itemizing medical out-of-pocket expenses.
Yep, that actually increased as well. So that was another one that is still in there. Some people still itemize medical expenses, but yeah, that's still in there.
Yeah.
Yep.
Leah, I see a picture or a question, coming across about when you refer people to the signatory, do we refer them on where to donate? Here's what I want you to think about when you think about the signatory, is we are your partner. When you refer someone here, we want to partner with you and with your donor to really come up with the best solutions for them. So we are not going to take that donor and give them a catalog of other places to give. We want to help grow the generosity and their giving opportunities within that referral relationship. So we're just going to partner with both of you. Just look at us kind of as that third party to come alongside and make sure they're aware of all the options. Know that what we often find is because you have that trusted relationship with them, you will likely benefit from the growth that we're able to help provide, but really you're providing value. That's where that relationship becomes even closer, and they become more and more loyal to your organization because of what you have been able to do in that referral process.
I mean,
other thoughts?
yeah, I mean, the way I see it, and most of the time, as Kristen said, I mean, I'm an attorney for our organization. The way I've typically worked with some ministries is that most ministries just either cannot handle some of the complex assets, gifts that we handle on a daily basis. These are primarily the real estate gifts, the closely held business interest gifts that are very difficult for just an average ministry to take in. And so the way I really see us partnering together is if there's a donor that is giving to your organization and you bring up the conversation of, have you thought about gifting real estate or maybe a portion of your business, these types of things, this is how we can be a referral to say, yes, we can help facilitate that gift for your ministry to help that donor actually grow what they're giving to that organization. That's really how I've tended to work a lot with more ministries recently.
Yep, very good. Another partnership question that came across, I would say a key piece and a key way to partner is just continuing to engage in our community, continue to engage through the resources we give you. Then when it comes to that donor partnership, like Evan said, with those complex gifts, we can assist there. We can also assist in providing that donor advised fund, like we talked about earlier, that can assist in the bunching strategy. So if you have additional questions specifically in how ministry services can partner with you as you relate to your donors, please feel free to shoot me an email. You'll get an email recapping this tomorrow. Just reply to it and let's work together, because everybody's situation is going to be a little bit different. You're probably thinking about some different donors as we have these conversations. So I want to make sure that we're able to meet your needs and give you the resources that you need to help in that relationship. All right. I don't know that we have any other questions coming across, so let us just wrap up. Let me, first of all, thank you all for engaging in what may not be the most exciting topic, but I think, again, like I said at the beginning, really as you develop these donor relationships, a key component is that they trust you, they see you as a relationship and not someone who's just after money. So when you are an expert of sorts, or you are at least informed, so let's just go with informed, on the tax law, then that you've added value to the relationship. They see you as a resource, and they will come to you maybe with some other questions. And so we certainly want to equip you to manage that. We will send a recap of this out tomorrow, so be watching for that. You will have access to the webinar that way. And then I want all of you to mark your calendars for October 17th. We will be talking about kind of cross-generational communication toward the end of the year. So our year-end giving plan, what is going to be the best strategy in communicating with all the generations? Just like we're trying to attract all income levels, we talked about that in your plan, we also want to make sure that we're engaging all different age groups and all different generations. So that will be part of that conversation on October 17th at 1 o'clock. Don't forget to go to the webpage, go to thesignatory.com, go over to Ministry Services. We want you to engage with the Facebook page there and the other resources. All right, it's fourth quarter next week, year-end giving. So don't be overwhelmed. I know in your development seat, you have a lot on your plate. Just, again, be reminded that you are sitting in a privileged spot where you get to talk to people about the work that God is doing through your organization, and you get to ask them to be a part. And that's pretty exciting. It doesn't matter what month the calendar says, that is exciting work. So I just want to encourage each of you to know that the work you are doing is eternal, and it really is a privilege to work with each of you. So until October 17th, God bless your planning and your donor conversations. Thank you, Evan, and thanks all of you.
Thank you.
Bye-bye.